and basically Prime Minister Modi is highlighting the functioning of banks, how some of the money is being recovered from bad corporates who had taken loans, etc., for inappropriate manners, and also talking about how credit growth will start reviving from here on. Varun, you were making a point. Which part of the financials do you like if this story is likely to play out that way over the next 12 to 18 months, Varun?
Yeah, I think some of the large corporate banks, having cleaned up their books, having raised fresh capital, are ready for a new lending cycle. I think they made excess provisions during the time of COVID. That is, some of it is being reversed now, and that is why we are seeing extremely strong profit growth from some of these tier one private sector banks and some of the large PSU banks. I think both these companies, both these kind of companies, should do very well going forward. I think some of the large NBFCs, which had also seen significant reduction in credit growth in the last 18 months, should also see credit growth reviving. I think we had a fairly good festive season. It seems the consumer demand is also coming back. So together with the new corporate capex cycle and the consumer demand sustaining, I think the banking industry as a whole should see better times going ahead.
Varun, also, how are you positioned on Nifty earnings? See, a lot of brokerages have in the last 15-20 days trimmed 22-23 aggregate earnings. And, perhaps the analyst community got ahead of themselves after 4-5 good quarters. So, what's your own estimate? And where do you see the market fair value based on 22-23, your own estimates?
I think we're looking at Nifty earnings at around 520 for FY21. On that base, we are looking at 20 to 25% growth this year, which is FY22, and post which we are seeing a 10 to 15% growth in FY23. So altogether, we see Nifty earnings somewhere between 750 to 800 rupees. I think there are some estimates in the market which are significantly ahead of that. So in our view, the fair value of the market lies somewhere around 16,000 odd. So markets, of course, in the short term have run a little ahead of expectations. And of course, as time passes by, the markets will start rolling forward to the next financial year. So I think the fair value lies plus minus 10% of the current levels. I think markets should get selective now. It's more of a bottom-up market from this point onwards. And I'm sure there is a lot of growth stories which are still available, be it in the residential real estate space, be in the mid-cap IT space, be in the chemical space, and that is where our focus is at this point of time.
Real estate, just for example purposes, DLF regained its 1 lakh crore in MCAP after 10 years. Then there is a clutch of, we all know the names, the IT beneficiary real estate stocks. As IT professionals earn more, they tend to buy bigger houses and all of that. And by the way, that area is seeing big wage inflation. Then there is, smaller names, pockets. And then there are some names which have just not participated and now are being merged with bigger unlisted entities to become bigger entities. Can you hint us what area actually interests you on valuation versus future growth side?
Yeah, so Ajay, I think if you look at the pan-India basis, real estate prices peaked out around 2012-13. In fact, affordability had took a big hit back then when your EMI to take-home salary ratio had hit as high as 48-49%. Today, with lowering of interest rates and housing prices not having gone anywhere for last 8-9 years, we are looking at that EMI to take-home salary ratio down to 28-29%. So there is a significant improvement in affordability. Of course, there are large sectors of the economy which are beginning to do well. IT, of course, being the largest out of those. So clearly, IT-oriented cities like Bangalore, Chennai, Hyderabad should see good real estate demand. I think in the last few quarters, the booking numbers which have been coming in are indicating a very robust demand. I think even in markets like Mumbai and Delhi, which had the largest oversupply, we are seeing a supply getting absorbed. I think ready properties have been absorbed to a large extent, and we're looking at now new launches. So I think overall, we should start seeing price hikes. Maybe we will begin to see that more in the southern part of the country because of the very robust IT demand. And gradually, we should see even the NCR and the Mumbai market getting aligned to that. So next 4 or 5 years, we should see price hikes kicking in, and that should lead to a significant growth in earnings of residential real estate companies.
If we talk about your sectoral overweight, which is that one particular sector which you are most bullish on over the next 5 years, and is a complete buy on dips in your view? And
So
then
I think
people can do their research and work there. But broadly, if you could say.
So Ajay, there are two themes, large themes that we are working on. One is there is a big export opportunity. India's economic growth, if you look at even 2003 to 2008 cycle, the start is always export led. This time again, we are seeing IT as a sector, considering there is a lot of tech demand and COVID has accelerated that new tech cycle. So Indian IT companies will do very well. Second, I think chemicals has emerged as another big export opportunity for India. We believe this can become a 50 to $100 billion export opportunity in the next 5 to 10 years. So these two sectors should do very well. Coming on the domestic front, I think residential real estate, this is the first time in 15 years, my career that we have turned positive, and the sector has become investable post RERA and GST, and sector is much more cleaner now. There is a very rapid formalization of economy of the sector. We are seeing large pan-India players emerge, and we have seen the weaker players getting edged out of the market. They are not getting access to funding, they are not able to sell the products, and therefore we believe the sector will become organized in a very, very rapid manner. So we believe large wealth should get created in the residential real estate space. Of course, it will take time. What we're talking about is a 5 to 10 year horizon, but we believe these are some of the interesting stories that we would like to invest in at this point of time.
All right, Varun, we'll let you go today. Look forward to chatting you very soon or more often, and this time on 18 of Sadesh also. Thanks for your time today.
Thank you so much for having me.